or you pay a fine of 5 million, or both. We do not want to invoke that provisions in the law, as promised that we'll be looking forward for you submitting the financial statement for 2024-2025 financial year, which will be done by September. So you have enough time. So next year, we will be looking at your audited reports.
Chair, with your permission, I talked of next financial year. Now we are in June, and in a few days the financial year will be over. And the two municipalities, their way they have run their affairs during this current financial year, which is going to end in June, is such that they were still integrated with the county executive, particularly with their parent ministry, which is the Ministry for Land, Housing and Urban Development. So our request, we do that for next financial year so that effective 1st July, they start operating separately and they prepare their accounts for the year 2025-2026 as an entity. Thank you.
I am very reluctant to allow you to extend, because June, you still have 3 months up to September. You can still prepare the financial statements for the 3 months and submit them to the auditor. Yeah. Because, you know, the municipalities, our assumption is that once it's gazetted, then it's operationalized, then it is spending money and also receiving revenue. So if we push it to next year again, it means we will be talking about 2025, 2026. Just 1 year to the election. that may not be very suitable. So I think try your best to get the financial statement provided to the auditor, because the law says you need to provide it before 30th of September each year. So you still have 3 months to do that.
Yeah, I hear you, Chair. We will try, but the problem is if you've been running your affairs as an integral part of the ministry and the executive, now to prepare abstract or accounts as a separate entity could be a bit of a challenge, but you will try. Thank you.
There is a financial expert here. Let me give him time to.
You are saying the problem is to let go. That's what you are saying in very many words, Governor. Because you just need to go and open for them account. It's the same thing you're doing. You just open for them account. Whatever responsibility you're giving them, that has got fiduciary responsibility, you just transfer to the account. That's something you can do today in the afternoon when you go to Kitui. You just go to a bank account. You've got to, because if something was created in 2018, up to today, you haven't opened for them an account. It's just an operational, independence. That is also just this financial independence that doesn't need a lot of time to execute on governor. I think I just want to wish you the courage to let go.
Letting go, I can tell you, I'm more than ready. I'm more than ready. During my initial term, I was perhaps the first and could be the only governor who established town administrations and made the town administrators accountable to the monies which is voted for them. But I've noticed there is a gap As you correctly say, they need an account of their own, not to rely on accounts under the county executive. My problem is now we are in June. If we open an account for them tomorrow, say, now for 30 days, although we have up to 30th of September to submit the accounts to the auditor, I think the remaining few days, I see a bit of a challenge. But in terms of letting go, under my leadership, we'll love to let go.
I get it, what I'm going to give you, but you see, Governor, you are disadvantaging yourself. Because what is contemplated by the Urban Areas and Cities Act is that a relationship as an executive with the municipality is supposed to be that of an agency. That even by now, what could have given the chair confidence, and I'm sure, would have been even some kind of form of agreement done legally, where you are saying that even the revenue that the municipality will be able to get, X percentage will remain to you, X percentage channel to us. You see, that agency relationship, that agency relationship needs to be seen, even if you haven't opened the account, but at least in principle, it needs to be seen. Because that's the basis for which you're giving us the confidence that despite the fact that you're closing your books now, the operational autonomy is evident. But you see, you're saying you want to be given time when that operational autonomy has not been guaranteed as an agency that should be done under the Act.
Chair, I think maybe to help the governor out is already he's saying they are still running the way they were running 2023-24, and we have like 20 days or 27, 28 days to end of the financial year. He can still continue that way, but by 1st of July, he starts now the full autonomy. But what the chair is saying is you can still use, because you know there is a vote for the municipalities, you can now extract the accounts for 2024-25. Instead of reporting under the executive, you extract from there and prepare accounts for the municipality. We know you're still paying salaries from the executive, but you can extract all those, whatever you are doing, and then prepare books so that you also have an opening balance for July.
We will endeavor to do that, Chair. Thank you.
So, Chair. Yes. I'm not sure I got what you were pushing. Chair, I'm addressing you.
Yes.
I'm not sure I got the direction you are taking, that you wanted the county government to provide audited accounts, or at least just financial accounts for the two municipalities for 24-25 between now and September.
Yes.
They have admitted on record that they have been running the municipalities as part of, the executive. So I don't know whether then requiring them to extract accounts for the municipalities from the executive would be encouraging them to do some doctoring. And I don't know what that will mean. But for me, I think then the guidance that you may need to give, if this pleases the committee, would be, we now have like Senator is saying, 27 days to the end of this financial year. They can just conclude the way they have been doing their business. But then beginning 1st July, which is a new financial year, then there is complete autonomy and separation. And then within that period of July, August, and September, whatever operations that each of the municipalities carry out, they carry those operations as autonomous entities, not attached to the executive. And whatever reporting can be done in that short term of 3 months, then that reporting is done as a demonstration of good faith in taking the direction that you had given. Chair, I submit.
Is the financial matters concerning the municipality, so that they can be reconstructed as financial statement for the municipality. Because then otherwise it becomes a recurring query, because we are addressing an audit query. We are not just looking at the autonomy in and out of itself, but it's an audit query that is recurring. You see the challenge? So that even if this committee directs that next year you can then start operational autonomy, which I was talking about, but the audit query will still be, they have never provided their financial statements.
Okay.
And auditors can guide on that.
Let me give it to the auditor.
Yes.
He needed you to make a comments on the documents which were submitted, the table before us, whether
Thank you,
they
Chair.
are you have reviewed them, and you are ready for us to proceed.
Thank you, Chair. The documents that were submitted to our...
In the interest of time, the matter to do with the water companies, the two water companies, Kitui Water and Kiambere Mwingi Water, we have isolated the 5 major issues that we want to look at. Number one issue is the issue of material uncertainty related to going concern. Number 2 issue, and this is in reference to Kitui Water, delay in construction of Ili Mukuyu Dam and Water Supply Project for Phase 2. Then the third issue, which applies to both, is excessive non-revenue water. And then there is an issue of failure to refund customer deposits. I think that sounds very well for Senator Kavindu. And then there is an issue on Kiambere Mwingi, which we need to address. That is inaccuracies and non-compliance with the reporting template. This is an accounting issue. So those are the issues we are going to deal with as far as water is concerned. For the hospital, because of time, the clerk will organize so that the next time the county is appearing before us on a matter to do with the funds, county funds, it will be combined with the hospital. So we may not have time to look at the hospital today, but we will combine it with the matter of funds when they appear next. So we request that we look at the matter of Kiambere Mwingi Water and Sanitation Company, starting, we have combined this query, inaccuracies in the statement of cash flows, with a query on non-compliant with the reporting template. Those are accounting issues, and you know how we usually treat accounting issues. So, auditor, you can read out the 2 queries, and then the governor will respond to the 2 queries.
Thank you, Chair. This is the report of Kiambere Water and Sanitation Company Limited for the year ended 30th June 2024. The opinion was a qualified opinion. Now I read the 2 issues. The first one was inaccuracies in the statement of cash flow. The statement of cash flow reflects net cash from operating activities totaling 5,821,950 and as disclosed in note 36 to the financial statement. However, the statement reflects receipts and payments amounts which differ with the ledger balances as detailed below. So there were ledger balances and the statement of cash flow amounts, and there were variances. Then I go to the other query, non-compliance, paragraph number 5 on lawfulness. Non-compliance with the reporting template. Review of the financial statement presented for audit revealed the following anomalies. Page numbering across the financial statements from page 1 to 24 should be in Roman numbers, not numeric. Statement of financial performance should start at page 1 and not page 25 as in the financial statement. The statement of financial performance against predetermined objectives is erroneously labeled financial year 2021-2022 instead of 23-24. And the fourth issue was on report of the independent auditors of the financial statement was missing. Thank you, Chair.
Chair, point of order.
Yes.
Auditor, what was the ledger balance in the first query in the accuracies in the statement of cash flow?
The ledger balances for operating revenue
Yes.
was 66,970, 136. 66, 970, 136.
136 with a variance of?
The variance was 4,215,199.
Thank you.
So, Governor, you can respond to the two queries.
Chair, allow me to request the Managing Director of Kimuasco to respond to that issue which the auditors raised. MD Kimuasco, come near
I think you
a
need to
microphone.
take a seat here. If you can respond from wherever you are, it's fine, but I thought you should take the seat here.
Okay. Thank you, Honorable Chairman and the honorable members. The cash flow statement in regard to the query was prepared using the direct method where the transactions were reported using actual revenue received and payments made. That is the cash basis of accounting, whereas the ledger balances indicated above were reported in the statement of profit and loss and other comprehensive income, which was reported in accrual basis of accounting, hence raising the two variances. Normally in accounting, those two methods are never mixed. And that is what brought about the differences.
Are you reading the response or you are explaining?
I've read the response and explained the last bit.
Oh, okay. Go to the second. Can you come and sit here?
Statements, because you are committing yourself and saying that whatever you are signing for is true. Because even you find normally, it is not the person signing here who will prepare the financial statement. Just like the CEO can sign on the financial statement, but he's not actually the one who prepared. But you need to go through and ensure that the financial statements are accurate before you append your signature. Thank you.
But Chair,
you know,
Chair.
let's have Senator Wambua first.
But you want to go first?
No, go. Proceed.
You see, Chair, the minute you append your signature on any document, it's an admission of ownership of the document. So we can't even begin to have a conversation around who prepared the document. Once you have signed it, it's your document. So you own that document. So I think let's be very clear on that. Because, Chair, remember we had the same issue here, and I know it was not for this current government, or the previous government, but the same issue with Kikotech, where people just prepared documents and then somebody is called to sign a document. They come here, they say, no, it's not my document, I was just given to sign. So I think it's important that because one of the roles that we should do is to help county governments also improve on their performance in terms of the templates that we give them. So that it's made very, very clear that the minute you are just signing a document, you're not signing it for somebody else. You are owning it.
Yeah, I think that should go out very clearly.
Because you've used the word assist. This person assisted us.
Is this person having any contract with the county in terms of any form of contract or employed by the county?
Yes, honorable member is an employee of a county-affiliated institution. That is the Mwingi Level 4 Hospital.
And in signing the accounts for the water?
Yes, Your Honor.
Auditor, can you guide us on this?
Chair, through you, let's be very clear. Is it the one who, he just came to sign, or is the one who prepared the statement?
Honorable member, he participated in preparation.
So he prepared the statement?
Yes.
I just want to know, what is the contractual obligation of this person with the water company? And auditors, give us the direction whether we can have that multi-cross agencies. Somebody who is working as an accountant in the hospital can go and sign the accounts for the municipality, for instance.
Because who will take liability?
Because I am really keen on that contractual obligation.
Actually, it is.
Auditor.
Yes, through the chair. It is not right. But I'm seeing a scenario here, maybe where all those who are involved in the preparation of the finance, this is my own thinking, maybe they don't have an ISPAC number. And then nowadays it has become a requirement. So maybe that is why they requested that accountant to sign on their behalf. But it's actually wrong, because it should be, somebody should have that ownership in whatever you are signing for.
Or maybe they need to tell us, Chair, this is basically a capacity issue. It means the water company did not have, or they don't have. So maybe they should be telling us because of lack of resources or whatever, I don't know, and they have employees within the county. Because basically, I think they're using the resources within the county to do these things. But we want to find out, have you started building capacity, or you are still continuing to use the same fellow? Because, the water company is supposed to be independent, but it's not, because you're using resources from other entities. And what we know and suspect, the accountant would say ISPAC number signed, but we 100% he did not participate. Of course, you are telling us he participated. We can't verify.
No, but even that, Eddie has raised a very important issue. What is a contractual arrangement? Because ordinarily, if a county entity wants to have an accountant from another entity, there will be some form of communication. If it is from this county government, they will officially second that accountant there to help them. But in this case, it was a kienyeji arrangement where you there is an accountant in the hospital, you call him, the accounts are here, can you come and sign? That auditor.
Maybe, Chair, also the other question would be, was any remunerative aspect to this transfer? Did he get an allowance, or was he paid for his signature?
This is a serious issue.
MD, through the governor, please respond to those issues by members.
I mean, the question I'm asking is very simple. Give us the document that established this arrangement. There's MD. Did the MD reach to this accountant through a written request that we're preparing our financial statements, we don't have a qualified accountant, and come in to assist us, and these are the terms. We will not pay you because you work in the county, or we will pay you because you work in the county. You will do it to this level, to this time, a contractual arrangement. If there is none, I don't know.
Give the acting MD the opportunity to respond to that. I think there is also, we have an accountant whom you have come with. Do you want him to assist in responding to that? Yeah, accountant, can you come where the MD is seated so that you can respond to that? But I agree with the Senator Eddie Okech that having the account signed by a registered member of ISPAC who is not an officer of the company, the water company, it's not to be encouraged. But as Senator Chesang indicated, when there's problems of capacity, interdepartmental, interagency support is usually requested. But the neat way of doing it is it be done by accountants within the company itself. Thank you. But let's hear the accountant, maybe if you can shed some more light on this. Thank you. Welcome.
Maybe this is the accountant who.
Chair, I want to confirm that Kimwasco wrote to the county government of Kitui requesting for assistance for an accountant, and it was confirmed in writing. We don't have that letter here, but we can submit it. Again, so, in terms of capacity.
But are you the one who did the draft financial statement?
I was doing it together with the accountant from the hospital.
So you are not ISPAC yet?
No, currently I'm sitting for my final paper in August. Okay. In terms of capacity building nature, Kiambere Mingi Water advertised for those positions.
So that this committee needs to apply itself, not just for the Kitui County, even for other counties, because I'm just asking myself where I'm seated. When you receive those letters of appointment, you know, they do the JD, and you're told this is what you'll do, and this is what you'll do. And then there's always that last line, or any other duties that may be assigned to you from time to time. Does that fall under that last clause? Is it okay that an accountant working for Ministry of Agriculture can be called upon to append their signature on a document for a hospital? Is that okay?
No, it's not okay. They should have their own people who are doing the signing, because by signing, this person is owning that doc. This person is not even an employee. Alternatively, we need to see now that kind of an engagement letter, which clearly states that this is what you've been told to do. And if maybe through the governor accepts that this is what this person is coming to do, then we needed to have that kind of an engagement. And that is the engagement that you are looking for. And then they will be explaining to us, why are they engaging someone from outside and not somebody within there? Then the capacity issue would actually come in under very serious terms of reference between. That needs to be there, yes, between the two entities.
And Chair, I just wanted to do the executive, which is the governor, that we don't have the capacity to prepare a financial statement because we don't have this kind of accountant. It is upon the governor to actually do in writing a seconding that I accept this. Okay? And that paperwork, and I don't even know how it didn't come in your 7 meetings, audit meetings, because it ought to have come. Right, okay? And then, even at the exit meeting, perhaps the government will have explained this at that level. But then it is on the power conferred on that documentation that should also accompany these financial statements. Because without that, then you didn't prepare a financial statement. But today we might be lenient as a committee. But if you are strictly speaking, that should be the order in all those entities. Because they're independent entities. In fact, the CEC Finance and CEC Water are board members of this entity by law. If you read PFM 184, by law, and they're supposed to check on that particular aspect of financial preparedness by the officer is called who is still studying, the one who is still, who doesn't have CPIC. Go and read PFM 149. Okay? The obligations are there, with regards to this particular arrangement. So I think, but because of time, perhaps, Chair, they can
Please follow up so that the reconciliations are done in 2024, 2025 statements. So,
Chair, even as you rule and to help them, but I don't think the people they've appointed are assisting fully, because the county has a county attorney who should advise on all these issues. And I don't know if the county attorney has been advising the governor correctly, or the accountants and the finance, team. So do you have the county attorney here?
Yes, we have the solicitor, and he normally advises, but I agree with what Senator Eddie Okech said. Both our Chief Officer Finance and Chief Officer Water sit as members of the board of both Kituasco and Kimwasco. And incidentally, both of them are CPAK members. And we have the CEO of Water here, the CEO of Finance is not here. But since you have advised us, we've taken your advice, and we will ensure going forward we do things the correct way. Thank you.
okay, we need to make progress. So, honorable members, we will go to the query on material uncertainty relating to going concern. Is a query in both. We are going to use Kitui Water as a base. Then, but when we are debating, we will look at the two concurrently. So, auditor, read out the query for Kitui Water.
Thank you, Chair. Material uncertainty relating to going concern. The statement of profit or loss and other comprehensive income reflects loss before taxation of Kenya shillings 32,796,024. Deficit of Kenya shillings 42,799,796 for 2022-2023, indicating. I'm reading the report.
You can tell us the response is on which page? Maybe CEC, you can guide us.
Page 10. What is wrong? It is paragraph number 2.
Which page?
Yeah.
Chairman, is page 21, just prior to the tag number 10. Just page 21 on the left, bottom left hand corner.
Just before tag 10.
Yeah, tag 10, before tag 10.
Proceed. Auditor.
Thank you, Chair. So I repeat, material uncertainty relating to going concern. The statement of profit or loss and other comprehensive income reflects loss before taxation of Kenya shillings 32,796,024 shillings. Deficit of Kenya shillings 42,799,796 for 2022-2023, indicating a marginal decrease of Kenya shillings 10,003,772 during the period under review. Further, the trade and other payables balance of Kenya shillings 145,404,293 increased by Kenya shillings 22,578,669 from the previous year's balance of Kenya shillings 122,825,624, which may be an indication of the company's inability to settle its current obligation as and when they fall due. Management has in the annual report highlighted that the deficit resulted from disruption of operations due to prolonged power disconnection, breakdown of intake motor, non-efficient pumps, high energy costs, inadequate water supply, and non-payments of full subsidy support by the county government of Kitui as budgeted. In the circumstances, the ability of the company to continue to sustain its services is dependent on continued support from the county government and other stakeholders. Thank you.
Very well. Governor, your response.
Thank you, Chair. I will request the MD for Kitui to read the response we have and also any issues arising therefrom. Thank you.
Thank you, Governor, for the opportunity. Chair, this is our response. In the F year 2023-2024, the company operated under a subsidized water tariff which was approved on 1st January 2021 and was supposed to be in use for 3 years. 2011, sorry. And was supposed to be in use for 3 years from 2011 to 2013. Considering the increase in the cost of water production, especially electricity bills and water treatment chemicals, the revenues collected could not meet all the company operational costs. However, the company implemented a revised subsidized tariff that is for the next 2 years only, with effect July 2024, as gazetted on 17th May 2024. The company has progressively been able to meet our operations and maintenance costs. The profit and loss reported has improved from the deficit of 31,163,742 in the Q3 of the F year 2020-2024 to a profit of Kenya shillings 34,253,106 as at 31st March 2025. We have annexed a profit and loss statement for the Q3 as submitted to the National Treasury Chair. Further, in order to reduce the cost of production, the company, through the support of the county government of Kitui, has solarized 3 bores in the current F year 2024-2025, that is the Odi Kanga, Mutuni and Matinjani bores. Plans are underway through the county government of Kitui and other development partners to restore an hybrid solar system at Masinga treatment plant and other water production sites to reduce the overdependence on electricity. Through this arrangement, the company will optimize the use of solar energy during the day. Several proposals have been developed and shared for consideration. This will reduce the cost of production, hence improving the financial viability and sustainability of the company. The company endeavors to progressively be self-sustainable with the ability to meet our O&M costs and eliminate dependency on county government subsidies towards cap range of O&M costs. Thank you, Chair.
Auditor, what is your comment on the response?
Thank you, Chair. Our comment is that despite all the measures that they have put in place, no evidence provided to show that the reversal of poor financial performance. So we are yet to wait and see whether they are going to make, maybe they are going to report a profit this time, because the measures they are saying they have implemented. They have implemented the measures, but we are yet to see whether the company will now start earning a profit. Thank you.
Are you trying to say that what they have reported here is incorrect? Because you are saying you will check whether they will make profit. They have said that the profit reported has improved from 31 million in quarter 3 of 2023-2024 to a profit of 34 million as at 31st March 2025.
We have not audited those quarterly reports. The quarterly reports that you're talking about, they have only submitted them to Treasury. Is that right? They have not given us a copy.
Okay, Mark.
So we can only now do the audit when we go there and we audit 2024-2025.
Mark.
Yeah, maybe Chair and maybe Senator Eddy we can go through this together. If you look at the financial position as audited, 23-24, and you look at that appendix, there are many changes which perhaps might beg a bit of explanation. For example, operating revenue 23-24 was 126 million. But when you come to what they're projecting, they're saying 215.
All of us with that document. That's
yes.
That
the financial statements.
Which one?
The audited.
I don't have the financial statement. Statement. Do you mind?
Was it?
Helping me to have them?
The audited report, Chair. Look at operating revenue, they are projecting to be 215. In reality, it was 126, so that sharp increase would be to be explained further. When you look at operating costs, for example, staff costs, here they are projecting 57 million, but on this staff cost, we had a whole 72, so maybe they need to explain how that would come down to that level. So then, Chair, we'll be able to understand whether what they're presenting or what they presented to the Treasury is realistic in terms of turning around the company from being loss-making to making a projected income of all this. I'm seeing it's indicating 34 million. Thank you, Chair.
Yeah, I think you got the question. Basically, you have projected your profits to be at 215 million, but what you are realizing is 126 million. There's a big gap for you to get to 215. And equally, on your cost side, you have projected 57 million as
Chair,
the amount.
For the record, did you say the profits projected at 215?
Yes.
Was that?
Yeah, that's
projected 215.
Yes.
But the actual?
Actually, it's 126.
126 for which year? 23-24.
So that's about 81 million short. Okay? But even more importantly, you projected your expenses on staff to be 57 million, and you are at 72 million. That's about 15 million more cost. I wanted, Governor?
Chair, find me because I'm lost.
Yes.
Find me.
Yes.
So the projections that they have read is 215 million, actual 126 for financial year 23-24, right? But in the management response, I read something different. I read an improvement from that 1 million to 34 million. Am I reading my own things?
Yes, my analysis was to do with, for example, look at the operating revenue. They dedicated 215 million, but in the audited financial statements, 23-24, they had 126 million. So maybe the question to management was, how are they going to increase realistically revenues from 126 to 215 in that period of time? Yes. And that's maybe that's the explanation for the benefit of the committee. That's all you needed, Chair. Thank you.
Honorable Chair.
Go ahead.
With your permission, in Annex 10, there is what we have attached as what we sent to the National Treasury for 2024-2025, the third quarter as at end of March. So what we have done, the comparative period, which is showing an operating revenue of 107,859.32, honorable members, is only for 9 months, because we couldn't have compared 12 with 9 months. So that 107,859.32 were our actual in the year under review for 9 months. And for 9 months up to now for 2024-2025, we are saying we are at 215, 167 and 852, honorable members. So whatever we have attached as our evidence, I know the auditors have not audited, But these are the facts of our financial statements as they were as the close of the third quarter, honorable members.
And Chair, with your permission, there was a review of the audit tariff last year, and really it's improved things quite a lot. And also, when we appeared before the Senate last time, they made a number of recommendations or reforms we are supposed to undertake. And virtually all those reforms have been undertaken, including governance issues and so forth and so on. Thank you.
Auditor, on the question of projections, are you satisfied?
Yeah, I think, Chair, that now explains why there's a hike, because now the tariffs have increased, obviously the revenue goes up. The staff cost reduction, you rationalize staff or?
Yeah, MD, can you?
Again, Honorable Chair, the issue of staff costs, I know it's not a very interesting thing, but we are multitasking as an entity because we have to make profits. So we are no longer renewing contracts for people who are not performing. For Kitui Water and for performers have no business with us. So if your contract is ended and you're not a performer, we just tell you get another place. So that has resulted to a decline in the staff costs.
It is not a decline though. Is it?
Yes, it's a decline, around 20 million.
Mark, didn't you say that the projection was 57?
Yeah, the projection was 57 and the previous year was 72, so there's a decline.
Okay.
So my concern was, is there the separation, and she has confirmed.
That's fair enough. But let's perhaps, because this is a query that we could have come to, I'm just only looking at
Well, on that, so that I also add a voice to.
Sure, Senator.
And she has admitted it's not a very interesting conversation. Disengagement always has a lot of pain to a lot of people. I hope then there is a mechanism of determining that performance. You know, a really very viable mechanism of making a determination as to who is performing and who is not performing. So that if you are deputy, I don't even know where you're deputy. I don't even know whether you have one. So if your deputy does not like you at all and you are in serious trouble with them, but they are performing, they retain their jobs and continue working.
Do you want to respond to that?
Yeah, Chair, with your permission, and I can respond to that. Kituasco is on performance contracting, where the CC Water assigned a performance contract with the Chairman Board of Directors. Myself, I've signed a contract with the chairman and I've cascaded it down to the managers. I know the issue of culture change. You could be a performer but rot in terms of illegal connections and all that. So character also, Honorable Senator, is something we are looking for. So we are very fair to people, very fair, sometimes even too motherly. Talking to them as our brothers and sisters, before we jot you down a letter, we've really talked to you and you cannot change. So we are very fair on that, Your Excellency.
Yeah, that's okay. I was just saying that because, you know, I've been involved in that kind of thing. I've been involved in disengagement with staff. It can be tough. It can be tough actually on you, not even them. When you see people just losing livelihoods and they're just going and you don't even know where they're going, it can be tough. So that you have a mechanism that is just a good mechanism of doing it.
Yeah, and MD, you must remember that was our recommendation from the previous meeting, performance contracting. So I'm glad that you're implementing that. And to the extent that we hear any complaint from the staff that have been removed, then we can be able to take it forward. But there's something you have said, Governor, that is very important, that you've got a new tariff. What is that tariff?
MD, can you elaborate on the tariff? Even Kimuasco, a new tariff.
Yeah, but let's just start with this
work very hard for them.
Yeah.
Elaborate on that.
Let's start with the Kituasco. What is your new tariff?
Yeah, thank you. In the old tariff, the average per cubic cost was 85 shillings. In the new tariff, the average cost per cubic is 190 shillings.
So,
but the good thing about the new tariff,
when did it come effective?
July 2024, specifically on 16th of July 2024.
So this financial year, it ought to have been taken effect, isn't it?
Yes.
So go with me to page 28. Page 190. I mean, page 28. Page 28 on audit issue number 9 of your own bundle of documents.
Using the marker where
Sorry, can you help the senators? It is on mark 17. Go to mark 17, just before mark 17.
issue number 9.
Yeah, issue number 9. There is something we need to address here with UMD. Okay? So, are we there, Governor?
Yeah.
Issue number 9.
Yes.
Your non-revenue water.
Yes.
Your non-revenue water is 46%. So if you took your tariff of 190 and multiplied by non-revenue water, how much does it come to? 233 million, isn't that? 234 million. That is the amount of and I know it's an audit query. I just don't want the audit to read it because it's quite we can go straight into it because it's a bridge to the issue of it actually addresses your issue of material uncertainty relating to going concern. My biggest problem with this non-revenue water, because if you have got a tariff that you have adjusted last year to 190, multiply that by the amount of water you're losing, that is 1.2 million. You're getting 234. It takes care of all your payables. It takes care of all your projections. So explain to us, why is this non-revenue water? You can read, of course, there's a very small management response. You can read that, but engage us a little bit of what is going on here with this non-revenue water.
Thank you, Chair. I'll go straight to the response. The level of non-revenue water for the FY 2023-2024 stood at 46%. The moving average as at March 2025 is 44%, which was above 25% threshold set by WASREP guidelines. Non-revenue water management has been identified in the 2024-2025 Petrosco strategic plan as a key resort area, with various activities/strategies aimed at reducing non-revenue water and thus ensuring sustainability of the company. Just as touch an annex showing the listing of strategies or in that strategic plan on reduction of non-revenue water. But we have some strategies which include, most importantly, one is about inculcating positive culture change, including change of mindset that non-revenue water can be managed to the acceptable levels, tracking and disconnection of illegal connections, surcharge and prosecution of illegal water users, prompt repair of leakages and bursts, installation of pressure regulation valves. Chair, with your permission, to us, actually we know this is the thorn in the flesh. And when we were doing a new strategic plan, we deliberately made efforts to have that stand alone as a key resort area. We are on it. I know there are the soft things that we can do, issues to do with mindset change and culture. We'll also be doing proposals to our own county government. There are some production sites which have fairly high revenue water that might need to change the infrastructure, issues to do with smart metering. And as we were preparing these responses, Honorable Chair, We've already been given a target by His Excellency the Governor, which as a management we must meet. We said we must be at 35% by close of the next financial year, which starts in a month's time. So we are committed to do that. And I know with the support of the county government, I know even retaining a 1% drop in non-revenue water is not very easy. But what we cannot do as an institution, we'll get the support of our county government and see what we can do. It has been progressively been declining, but we are not comfortable with the decline. Issue of district metered areas, which needs like the bulk meters, which sometimes are very expensive for the water companies. But now that the tariff came with the change in revenues, in the year under question 2023-2024, we were at around 53% O&M coverage. As at March, we were at 83%. Actually, we did some analysis, and if we can reduce the non-revenue water to that 35%, would meet all of our costs. We'll be at around 104 O&M cost coverage. So that is something, Honorable Chair, we are committed to do.
Senators?
Thank you, Chair. I think the point the Chair was bringing, when you are raising the issues of how you are going to address the issue of material uncertainty, it was just very easy. If you had addressed that issue, all the other issues which had brought in, they were not necessary, because this only one can sort all your issues. Yeah? For Kitui.
Senator? Senator Kitui.
The comment from me would be, Madam June is talking about settling at 35%, which would be fine, given that we are at 46. But remember, the target is below 25. Yes. So even at that 5, you should be in breach. Yeah. So I think you should. I don't know how you're going to do it, but I mean, you are the MD. You have to find a way of just pushing it to 25. That should be the threshold.
In fact, Senator Wambua is so right. Your target is, you know me, I'm a numbers person. I just like practicality of numbers. You see, your target is to get to 104 million. Assuming that we forgot about the 46 and say that now we adjust it to 21%, which then will get you exactly at the required WASREB standard of 25%. That would mean that your non-revenue would then be, that you're trying to protect, would then be 561,403. If you do the math with your tariff, that's when you eat 106 million. So you have got no choice. What the senator is telling you, if your target is indeed 104 million, the only way you hit that is when you get to 25%. So take it very seriously. But in terms of recommendation, I think that you categorically need to go and check on what actually are your sources of non-revenue. And Governor, here, I tend to doubt MDs. And just forgive me for this, because now she's the only lady who is in this entire team. I don't want to look like I'm scathing her, but this is the thing. I want you to go and be able to classify your non-revenue water. Don't leave it to what I would call physical losses. You see, you have just mixed all of them together. But I want to see that physical losses in terms of the technical areas where they're coming from. Is it from some dilapidated pipes in your system? Is it from your distribution networks? Is it from some construction that are going on in the county that are bursting pipes? Is it vandalism? I mean, track it. And then tell us that out of this 46%, I have tracked my physical losses to be this 2% or 20%. Therefore, when you say that we are projecting to reduce, then it aligns with the strategy of reducing it. The last one would be the commercial losses. Commercial losses come as a result of your own deficiencies. For instance, in collection. Are there customers that you are giving water and you're not collecting money from because maybe they are tough, It could be national entities that don't pay for some of these things. It could be some that they pay, but they still demand some payable from you, because I see your payables are very high. And those payables sometimes do come from people like the waterworks on electricity bills or those kind of things. Or is it a billing problem? So that you tell us, this 20% is coming from this billing problem or collection problem, but these are the list of my debtors. These ones are bad ones. I want to write them off. These ones are good ones. I can be able to put a debt collection mechanism to them. So don't just have it as an amorphous thing, because this is actually the only way you sustain this company. I'm less keen on the P&L. I'm more keen on the non-revenue water handling. But your answers seem to be generic, but I think they can be better if they are very specific and you track it down. With that, let's go to this other company, Kiembere. I think this is issue number 4.3. If you can read, auditor. Oh, actually, let's just go with its material as a certainty and then get to non-revenue as well.
Okay. So I read.
But I hope that Kitwasco has taken the recommendation on the non-revenue, but it will be written to you. Yeah.
So I'm reading the material and certainty for Kiambere.
Yes.
Thank you. Kiambere water, yes. The statement of profit or loss, another comprehensive income, reflects operating revenue amounts of Kenya shillings 66 million.
Can you assist senators to be on that page?
Are we there? I read? Thank you. So I repeat, material uncertainty relating to going concern. The statement of profit or loss, another comprehensive income, reflects operating revenue amount of Kenya shillings 66,970,136, a decrease of Kenya shillings 50,451,563, or 43% of Kenya shillings 117,421,699, realized in the prior year ended 30th June 2023. In addition, the company realized a deficit of Kenya shillings 18,252,855 during the year under review. The poor performance was attributed to reduced volume of water production, which declined from a high of 60,000 cubic meters produced during the month of July 2023 to 23,000 cubic meters in the month of June 2024. Review of the company operations revealed that the water pumping rate at Kiambere treatment plant reduced from 135 cubic meters to 57 cubic meters per hour due to faulty high lift water pumps with high maintenance cost of the high lift water pumps. In addition, there were high electricity bills and failure to solarize the powering of the water systems. Further, there were frequent power disconnections by Kenya Power and Lighting Company due to unpaid bills. In addition, Migwani water supply system, that is the Migwani borehole, which serves a population of approximately 15,000 people, had not been operational for the last 7 months. In the circumstances, the ability of the company to continue to sustain its services is dependent on continued support from the county government and other stakeholders. Thank you, Chair.
MD.
During the year under review, 2 high-lift water pumps at Kiambere treatment plant malfunctioned due to aging. The pump's efficiency dropped from water production of 135 to 57 cubic meters per hour as at the close of the year under review. The company also experienced high cost of maintenance of these water pumps due to their aging and high costs of power. The company is broadening its revenue base by adopting alternative water sources, which include bowls, rock catchments, and sump wells. Notable examples include the new Tia sump well, Kalwa Samuel, Wikidhukiwi Mbondo Samuel, Gankanga Samuel, Nguku Samuel, Kusorok Catchment, and Mui Kaki Kilali Water Supply Project, among others. This strategic shift not only diversifies the company's water sources, but also increases service coverage, enabling us to reach more communities with reliable water supply. There is an annex on alternative water sources correspondences. Also, in pursuit of solar energy for cost efficiency, the company is actively exploring solarization of Kiambere treatment plant as a strategy to reduce power costs. So far, several organizations have expressed interest in partnering with the company on this initiative. We have our next on the same. Then the company has engaged the county government of Kitui to assist in acquisition of new water pumps, and the supply, installation, and testing of the new water pumps is expected to be completed by the end of June 2025. There is an annex on the request. In October year 2024, the company rolled out its new full cost.
I think because of time, I can see all the measures. We have read them. They look futuristic. Perhaps the auditor, I think you've read them as well. So I don't want to make you go through the pain of reading all of it. But auditor, do you have a comment on the general responses before I give this to senators?
Thank you, Chair. Like you're saying, these are all only things which can be confirmed when we go to audit the 2024-2025, because they are saying they will implement. So, but if they are well implemented, to us, we think that would be a good turnaround. Thank you.
Mark?
Yeah, thank you, Chair. Maybe mine would be just for the benefit of the committee to find out some of the letters there to the directors of the water department. Are there any responses? Is there any budget towards attaining that, so that then we're able to see whether what is written will actually come to be? Thank you, Chair.
Yeah. Governor?
Good question. Let me ask my Minister for Water to respond to that. And if you need the assistance of the CEO to do that. But I know they've been responded to and acted actually upon. But let him respond himself.
Thank you, Excellency. What the MD has said, they actually factual things. Like, for example, they wrote to us when the pumps at Kiambere became very inefficient and they could not pump water. And then through that request, we budgeted for new pumps. So we've already procured them, only that they can be accessed locally. They have been sourced from outside the country, specifically in Italy. And they are, by June this month, the two pumps will be here. We will install them. So we expect from July, they will be pumping properly from the intake. They will be able to abstract sufficient water. We also have a policy where the infrastructure we are developing, especially the samples we are developing, all these projects we are handing over to the water companies. And we also put them on solar, so that again, they don't become challenging when it comes to operations. Here they can be operated at a minimal cost. So they are able to also to be able to broaden their revenue base so that they don't only depend on the Kiambere intake. Thank you, Chair.
Senators?
It's a good thing to do. Maybe where we are going, actually, that's what we need to do. But we should also not lose sight of the fact that it is not going to solve our building problems, because you can only use it for as long as there is sunlight. When there is no sunlight and people use water, whether there is sun or there is no sun, you still need water. So one of the things that you need to do is do a proper hybrid system to ensure that you install solar-powered pumps that will pump as much water as possible during the day. then they switch to the grid in the evening, but the pumps that are installed are efficient. Because one of the biggest problems that we have with some of these pumps, and they have noted it here, is that some of them are probably even older than me. And I'm very old. So the efficiency is what it is. You know, you spend more time actually, you spend more money pumping the water than you can ever collect from the users. Secondly and lastly, those subwells that you are using, it could actually be something you may need to put a little more thought and money into. Because, Chair, you know, you people here think Kitui is a very dry place. Yes, it could be. But when it rains, it pours. And we can find a system of just stopping the water flow and harvesting that water when we need to harvest it, whether through subwells or sand dams. And I will give you an idea for Tia, because I've seen you've done Tia. Tia is the river that you cross as you get into Mwingi town. Fairly big river. If you can find a way of harvesting that water through maybe some dam, whichever dam that is, you could supply water to that town more efficiently. That town has a big problem of water, Chair, and the billing. I don't know how the minister is supposed to get money to pay for this, but he is the minister, I am not.
Just for the record, when the senator of Kitui says he's very old, it doesn't mean that he's not efficient. He's a very efficient senator here. But that one I can vouch for. It's a very efficient senator. But could we combine this with the revenue water due to pressure of time? Where you said, Governor, you have adjusted the tariff on this as well. Issue 4.3.
Issue 4.3.
Non-revenue.
Non-revenue water. Review of water sales and production records revealed that the company produced 579,220 cubic meters of water, out of which 365,831 cubic meters was billed to customers, while the balance of 389 cubic meters, or approximately 37% of production, was non-revenue water, valued at Kenya shillings 19,115,386.62, based on the average selling price per cubic meter of Kenya shillings 89 shillings and 58 cents. However, non-revenue water exceeded the threshold of 25% prescribed by WASLE. Thank you, Chair.
Yeah, I think because of time, the same feedback applies. I hope you are listening very carefully. Go and do your math. You know, the money you are losing is about 64 million. I don't want to bore you with the math. With that non-revenue, with the new tariff, that's the amount of money you'll be losing if you don't solve for these causes of the non-revenue. So take the feedback we gave to, unless there's a senator who wants to add on something.
The only thing, Chair, to add, which
yes,
is important. You know, when the Auditor General reads their query, then they should read everything. I have realized that when she reaches at the last sentence, she keeps quiet. I don't know why.
Thank you.
Yeah,
so I can read.
We should always remind management, if they're in breach, they should be reminded that they're in breach. Yeah.
Yeah, like 25% is not a wish. Number 12. Issue number 12, auditor with Kitwasco on failure to refund customer deposits. Then we will leave it there once we finish that.
Thank you, Chair. Failure to refund customers' deposits. The state Sorry.
Kitwasco,
1,287 as disclosed in note 26 to the financial statements. However, the bank deposit account reflects a balance of Kenya shillings 9,515,939, resulting into a variance of Kenya shillings 20,865,348. As previously reported, the difference of Kenya shillings 20,865,348 represents the amount borrowed by management to finance various activities, including Endau Ilmukuyu Water Project, security for a bank guarantee and internal borrowing.
Should be more than 5%.
should not be more than 5%,
Yeah.
should be approved by the board. And did you hear the last part? Yeah, the county assembly, and must be done by within which day?
It is below 5%, and a customer will not get their money should they decide to withdraw. This is a mistake, which going forward we will make sure, and I can tell you, we'll make sure we are very hard on any company which does not follow this. So, thank you.
Governor, let me try to help you on that one. You know, there is a push by everybody, water companies and all that. There's a push for autonomy. You know, people want to be able to run their businesses and do their thing. Now, but my advice to the executive is get involved with these companies only when you must get involved.
Yes.
Let them run their affairs. If they can't, then they can't. You know, and that's why we only have one MD for Kitwasco and one MD for Kimasco. If you can't deliver on the mandate of the office, then you just can't. Somebody else comes and does that. Because you see, what I see here is a situation where they still feel like they're babies that are being carried by the county executive, and they know when things are bad, they will always run back to the county executive, they will be bailed out. It must be a point that you draw the line in the sand.
Senator, this is the other way around. This is actually